I'd like to welcome Damon Dormer, who is Managing Director of Golden Mile Resources. Damon's going to talk to you about the Quicksilver Nickel Cobalt project, which is in Western Australia. Damon.
No worries, thanks very much. I'd like to start firstly with just talking to, let's make sure this is all working. So really talking about how we leverage our assets. Sorry, getting a bit of, I might stand off to the side actually. How we leverage our assets. So with Golden Mile, we critically have a flagship project at Quicksilver, as well as a significant exploration play with you and Mary within a greater portfolio of projects. But I'll start with talking the usual disclaimer stuff. Please read at your leisure the presentations on our website. But then talking to the team. And I want to start with the team because it's really important to understand it takes the team to go and advance projects and to build projects. Now we have an experienced team with the board. More importantly, we have board members who have, in their individual profiles, have demonstrated success at building projects, discovering assets, funding and finance. And that's important because experience is one thing, demonstrated delivery is another. The board members also have skin in the game. We own roughly a bit over 10% of the company. We've invested a significant amount of money. We have a tight top 20 shareholding with some significant individual holders. And we only have 330 million odd shares on issue at the moment. Market cap as of close of business yesterday is about 12.5 million at a share price of 3.8. So an awful lot of upside in where we have the potential to go. As I touched on with the portfolio, our cornerstone asset is our Quicksilver project, which is a nickel cobalt project, which also contains iron. It actually has mineralisation of scandium and rare earth elements within that as well. And that's where most of our focus is going on driving that project and looking how we move that into studies and further on beyond to construction. We also have Ewan Mary, which we're currently drilling at the moment. We have an RC rig up there, drilling a campaign there, as well as a plan for heap of soil samples, and looking to take that forward. And then looking at the rest of the portfolio, we're really looking to see how we consolidate that portfolio and keep our focus on our primary objective, which is Quicksilver. So we'll be looking at strategic alliances, JVs. We'll be looking at how we consolidate, how we leverage value from all of our assets in their different forms for the benefit of our shareholders. Really want to talk to what we've got to start with. We already have a deposit at Quicksilver of 26.3 million tonne at 0.64% nickel, 0.04% cobalt. That was actually defined in 2018, and recently, through the course of this year in particular, we interrogated our data and done further test work to really determine that we have significant mineral rare earth oxides as well as scandium. In the rare earths, as you can see, we're getting trios on average up to 4,000 ppm and with spikes up to just around 8,000. And we're seeing similar stuff within the scandium in terms of the 50s and the 100s type ppms in the scandium results. Now our focus is on the nickel and cobalt. The rare earth elements and the scandium, in the way we're approaching this ore body, is all about just adding cream on top of what we're doing. So I'll talk primarily to the nickel and cobalt, but I will talk to what we're doing in the scandium and rare earth space as well, just so people can understand how we're tackling the problem. So what's the geology telling us? This ore body was originally thought when the deposit and the resource was, when the deposit was determined, the resource formed, that this thing was a ubiquitous style laterite deposit. Now, particularly over the course of the last year, there has been a lot of work, and the geology is starting to tell us that this thing is looking to be very different to what it was initially thought. We conducted back in March a campaign of PQ drilling, which was designed to get metallurgical test samples for the MES test work program we've got underway, which I'll touch on a bit later. And within those drill holes, look, we had a spectacular result, and it was absolutely spectacular. And it's spectacular on two fronts. One is, and I'll just focus in on the 28 metres at 2.34% nickel contained within that. But what we also found that it had a lot of vermiculite in. We found that we're seeing something very different in the mineralisation and the flow on through to the MET test work. The RC drilling which we conducted through late July and into August to test what lies underneath this ore body into the primary layer, we're seeing those drill holes visually, because we haven't got the assays back yet, we're seeing varying vermiculite mineralisations sitting within those holes visually, and we're seeing significant biotite intersected in multiple forms. Now, why is that important? The vermiculite's a key driver in this ore body from what we're seeing. Vermiculite is simply weathered biotite in its simplest form. Now, the significance to us is that we see that the potentially for structurally controlled zones within this ore body. So it's going from this thing that was thought to be this ubiquitous, flat-lying, very simple lateritic deposit to something that's getting a lot more structurally controlled. The great thing about structure and grade associated with structure is generally grade goes up, right? So the ability to look at more selective mining on higher grade, potentially on higher grade lenses, obviously when looking at that from a value proposition, looks to have some great levers we can pull when we move into scoping study. And speaking of that, I think it's really important to understand, because this vermiculite in particular, and when I talk to the metallurgy, I'll highlight what we're seeing there. So why is the nickel sitting on the vermiculite in particular? Look, there's nickel associated with everything else, but we're seeing high-grade nickel, particularly in the vermiculite. Now, that can happen in a couple of forms. The most conventional theory around how that happens is the vermiculite, and people familiar with vermiculite, they may have it in their gardens, they may have it in their insulation. It acts like a sponge, right? And in an ionic solution, in an ionic form, it can suck up the metal ions around it. It's actually used for heavy metal cleanup as well. So it can suck up that. So what we think's happened in a conventional theory is that the vermiculite's been there in the oxide layer and it sucked the nickel onto it. Now, if that's true, and this is where it gets good, if that's true, then the nickel that's bound to the vermiculite effectively happens on the surface. Why is that important? Well, it's important because if that's what's happened, then to break that nickel off the vermiculite is a low energy process. So the bond should be relatively weak, therefore the way we can process it becomes relatively cheap in a secondary processing. That also enables us to look at product streams that start to move into secondary processing in what we were going to do. So as a part of what we're doing in forming up the scoping study, we've got a heap of data, right? We've got a heap of geochem data that we're analysing for all the various trends in understanding this, because all this stuff around the structural orientation and the high-grade vermiculite, it's all relatively new. It's all been the last few months that we've had this information come in, and we're processing it, understanding it, and doing a lot of other work. So we've got a heap of data analytics going on. We've got additional detailed geophysics information that we've already done, and we're just waiting for the results to come in. I'll talk to the meth test work program in more detail, but we've already done an awful lot of work there, and we're doing more work even still, particularly around the vermiculite. And obviously we've got more drill assays coming in from the RC program, which will help give us a better picture of what's going on, particularly how these interactions can be occurring. And our goal is using all that data and all that framework to really set the frame for the scoping study. Because this ore body is looking to be different, therefore we need to look at how we infill drill it differently. So we do the work properly, we look at the data, and we use that to drive the most economic way of getting the infill program to properly represent this ore body and structurally understand it, and then we can base the economics on that in the scoping study. So we will be running a new resource model as a part of that process. Into the metallurgy. So we talked a lot about the geology, but what's the metallurgy telling us? So our view of what we were originally approaching of this earlier in the year was to look at to use simple beneficiation to take the what we dig up in the oxides. Now the oxides are free dig. This is a very simple dig operation from a mining perspective. And then simply using screening and scrubbing, magnetic separation, and some other mechanical processes, simply looking to beneficiate up into lower grade concentrates that we could then on-sell from it. So keeping our capital profile very cheap on the processing side and looking at that, then transporting those concentrates to market. The screening and scrubbing results have come back and demonstrated we're seeing upgrades of anywhere between 111 and 226%. Now what's great about that is what we cast off, which is the silica, actually has a value. The silica can be used to form industrial aggregates as a byproduct, and we can sell that locally as well for construction. The mica concentrates, now these were hand prepared off the data so far, and with that we're seeing nickel grades in the mica, which is the vermiculite, sitting at between a bit over 2% to a bit over 3% on those two samples. And in the magnetic separation, we get to form a nice nickel iron chromium product, which actually has a nice, it almost becomes a very selective product for the stainless steel industry because the chromium is actually almost on spec already when we look at how much chromium we've got in there. So that's a separate process where we can generate another product. But the mica grades are still that, because when you start running 2 to 3% in the mica, it gives us two options on things. And when we're seeing these higher grade zones, these structurally controlled zones, when we think about where we want to be. So we want to go and move this thing through its studies, construct it, build it. So then we have to think about, well, how do we pay for that? Now, grade gives us two distinct advantages within that micro in particular. So the grade gives us the potential to DSO some of the high grade to help fund the construction costs. Also, the grade, and particularly the way we can get to the vermiculite, allows us to really drive down the secondary processing options. And that's important because the secondary processing on at least one of our products allows us to look at them the potential of battery grade style nickel for sale, which obviously attracts a much higher price than what the cons will in that marketplace. So as we can see on the left, we've got a heap of test work underway. The vermiculite optimisation and characterisation is obviously a key part of that. But also, we're still looking at the concentrate work, because through the beneficiation system, we do want to see what the scandium concentrate's up to now and what the rare earths concentrate up to. So what we're really interested in is what the multiplier effect is. So when we identify areas in the ore body which are high in these areas that we plan to mine, then we can look at what the uplift will be in those and where we can get them off, and then look at the value propositions that sit with them. But still, we've got a lot of work still in flight around all of this. We've got the primary work done, which we wanted to do, but certainly those secondary processing options we'll be conducting through September and October and into early November. In terms of what we've done so far this year, so I joined the company in February, and we've got through an awful lot. We've identified the rare earths and confirmed that within the resource envelope. We've identified the high-grade scandium within the resource. We collected 1.6 tonne of high-quality bulk sample from PQ diamond drilling, which we conducted over March and into early April. We commenced the critical met test work program. Now, we need the PQ drilling for that because the diamond drilling protects the structure of the ore body, and we need to test those mechanical properties, so we didn't want to damage that through RC, using RC or another style of drilling for that. So we've gone for the highest quality sample we can collect, on which we can base our analysis on, which should give us the best results we can have to analyse on when we move to business case. As I said, the metallurgy test work program has commenced. We identified the potential for further primary rare earths, and we commenced the drilling program for that. We had that spectacular nickel intercept, but more importantly, that nickel intercept has also driven us into a further direction of understanding this ore body, and which is more and more looks to be more and more different to what was originally thought. And when I say different, it's good different, right? If we've got the ability to look at higher grade structurally controlled, that is good. We've confirmed that we can cast off a lot of the silica and upgrade the nickel from our scrubbing circuit. And we completed the primary drill program in August that we're conducting there. That's just quicksilver. And as you can see from before, we've got an awful lot of work still that we're going to lead into and carry on between the met test work, moving into scoping study and all that. But I will just touch on Ewan Mary as well, because while quicksilver is our focus, we still want to keep advancing Ewan Mary as well and look at how we drive value there. So we've got an RC and soil sampling program underway at Ewan Mary. The drill is currently drilling up there. It's most of the way through the program, and we're seeing that we're also going to be conducting a soil sampling. So I'm a bit off, but I will lean over it. So you can see the 5 holes there, and then we're running a lot of soils, particularly down this, because this was what was newly identified back in May around Ewan Mary. We want to go to more detailed soil samples. Why? Because it costs less money to hone in and closely more define the potential targets, so we can be more selective in where we spend money in future. And I get asked a lot, how does Ewan Mary fit into the picture? Ewan Mary fits into the picture that we want to look at how we derive value from it. So we will look at how we look to monetize this over the next course of time. I won't ever say how long, but we'll look to drive value from this and look at how we can create that return for our shareholders. Because we're very close, and I say we're on the cusp of moving into scoping study, and then when we move into scoping study, an awful lot of our focus will be tied up there. And just to really wrap up, I just want to touch on, we are leveraged to a clean, sustainable future. I know it sometimes sounds like a catchphrase, but we have particularly our flagship project. It's a nickel cobalt project with mineralisation of scandium and rare earths. Now, I'm sure you've heard a lot about rare earths, maybe a bit less about scandium. Scandium is a metal that's used in all sorts of applications across hydrogen, electrification, lightweight alloys. It's a fantastic metal. But we've got 180,000 tonne of contained metal in the known deposit. That has an in-ground value of over $5 billion at current market prices. We've got a very simple mine plan. It's a free dig. We're looking at our front end being a very simple beneficiation process, but I will highlight that what's come on recently is the potential for some secondary processing and upgrading. We're in a great location. We're just down from we're just near Lake Grace in Western Australia. We're 300 k's from here. Very well facilitated town, road access, 2 ports, all that great stuff. Really simple location to operate in. And we're very leveraged to not just the current demand on metals in the usages, but that whole electrification, decarbonisation process. But just to close, and really I'll bring it right back to the start. All of this is great, but you've got to have the team to do it. We've got the team, we've got the dichotomy of skill sets, we've got the demonstrated success, and we've got the drive. So, in a nutshell, we want to take this all the way through. Thanks very much.
Answer a couple of questions. Any questions for Damon? I've got my usual question. We've heard a lot over the past, day and a bit now, around strategic interest. Obviously, you're fairly early stage still, but when you start to deliver those economic studies and you're thinking about financing, have you had much interest, or are you thinking about already the different strategic routes for such a critical minerals focused project?
So the short answer is yes, we've thought about it, and actually thought about it extensively.
Okay.
The reason I say that is that it's one thing to show economics, it's another thing of having a plan to build, right? Because the real world factors come into the plan to build. So what do I mean by that? So we want to look at our low risk, low capital options. So that drives the whole financing criteria around that. The more we understand this ore body, that will influence those decisions, because we could be in a much better position to part fund this ourselves, which is, to me, a critical upside of this project in particular. And keep that on the table, because we're not into this build it and they will come. Go try and build a $500 million or $1 billion plant, with a great asset, but you've still got to go borrow the money, or you've got to finance it. So our very much view is modular. We stage it. We look at how we build the profile up. We look at to self-fund where we can. Obviously, you still bring money in for that, but be very pragmatic about how we approach the whole thing and keep it, and really drive in, keep it simple.
Okay. Thanks, Damon. Cheers. Thank you.
Thank you.
Cheers.